What if the real key to building, a massive wealth isn't about earning millions right away? What if it's about something much smaller, like a daily habit? Maybe even deciding not to buy that cup of coffee every day. We're diving into the really surprising wisdom of one of history's most successful investors. Today, we're doing a deep dive into the principles of Warren Buffett. Not just how he made his fortune, but his whole philosophy on life, money, and, success. We've gathered insights from sources like Buffett's Wisdom, 7 Principles for Life and Wealth, and the big biography, The Snowball, Buffett's Life, Business, and Wisdom, plus other analyses of his philosophy. Our mission really is to pull out the most important nuggets for you, give you a shortcut to being genuinely well-informed, hopefully with some aha moments you can actually use. Okay, so let's start unpacking this. Warren Buffett, right? The Oracle of Omaha. He has this focus analogy.
Oh, the snowball.
Exactly. Life is like a snowball rolling downhill. The trick is to find wet snow in a really long hill. It sounds so simple. But how did that one image become the sort of guiding philosophy for, arguably the world's most successful investor?
Yeah.
And not just for money, right?
Yeah, it's fascinating, isn't it? Because that snowball idea, it just perfectly captures his whole approach. It's fundamentally about consistency and incremental growth. Think about it.
Mm-hmm.
Small, smart choices repeated relentlessly over a really long time. That leads to these extraordinary compounded results. And you're absolutely right. It's not just about the financial side. It's about building success in, all areas, learning, your reputation, relationships. It really sets the stage for everything.
And for him, it started incredibly young. I mean, his childhood in Omaha, it almost sounds like required reading for young entrepreneurs. Obsessed with numbers from age 7, the newspaper routes, buying his first stock at 11. It feels like these weren't just childhood hobbies, they were foundational. How did something like delivering papers actually instill that kind of patience and value-seeking he's so famous for?
That's a great point, because they weren't just kid things. They were real hand-on business lessons.
Mm-hmm.
The paper route, that taught him about grinding it out, consistent effort, customer service, the power of just doing something again and again. And buying that stock at 11, which then dropped before it went up, that was a very early, very practical lesson in market swings and why you need patience, even when things look a bit grim. These experiences gave him a feel for money that went way beyond just theory.
And his family was key too, wasn't it?
Oh, hugely. His father, Howard Buffett, he was a congressman, an economist. He instilled that rational approach to money, the value of hard work, very principled. And his mother, Layla, she was more the emotional anchor, teaching discipline, resilience. It was an environment that really fostered sound financial thinking.
You can see how those early days, plus growing up influenced by the Great Depression, really built this deep sense of caution in him.
Absolutely. That aversion to unnecessary risk.
Mm.
And that conservatism, that caution, it led him straight to Benjamin Graham at Columbia.
Ah, the legendary mentor.
Right. A completely transformative experience. That's where he really learned the core of value investing, intrinsic value and margin of safety. Graham taught him to ignore the market's mood swings and figure out what a business is actually worth based on its assets, its earnings.
And the margin of safety.
It's like Graham's famous line, buy $1 for 50 cents. That discount, that's your buffer, your protection against things going wrong or you being wrong in your analysis. It fundamentally shifted how he saw investing from speculating to owning a piece of a business.
You know what I find really, really interesting, maybe the most interesting thing about Buffett, is how he just flips our usual ideas about wealth completely upside down. We tend to picture, the fancy cars, the mansions, but Buffett, a multi-billionaire, still lives in that same pretty modest house he bought decades ago. What does that simplicity tell us about his definition of wealth? And how does it challenge, what we normally assume?
Well, it really makes you ask that question. Why do so many of us mix up income with actual wealth? Buffett demonstrates so clearly that true wealth isn't about the money coming in. It's about how much you save and, critically, what you do with those savings. He shows that a huge income, if you spend it all, builds zero wealth. His disciplined avoidance of that consumption trap, the pressure to spend more just because you earn more, that's what let him accumulate without feeling the need to show it off.
It's pretty astonishing. That house in Omaha, bought in 1958 for, $31,500, still lives there. But in today's world, with social media, flexing influencers, leasing Lamborghinis they can't really afford, how does Buffett's kind of quiet wealth even register? Is that approach still, possible or even desirable for people today?
That's a really critical point. Buffett's life, it underscores a basic truth. Real wealth is often quiet. It's built through discipline over time. That flashiness we see, especially online, often hides financial fragility. A lot of it's built on debt. It reminds me of Ingvar Kamprad, the IKEA founder.
Oh, yeah, the stories about him are legendary.
Exactly. Flying economy, driving an old Volvo, shopping at flea markets, a multi-billionaire. He lived that principle. True wealth is silent. Flashiness often hides fragility. His lifestyle just didn't signal billionaire in the way we expect.
And connected to that saving is his strong stance against credit, right? He warns about it being this potentially crushing cycle of debt.
Absolutely. He points out how compound interest, which is your best friend when you invest,
Right, the snowball effect working for you.
it becomes your worst enemy with debt. It just silently eats away at everything you earn. For Buffett, financial independence starts with living within your means. Simple as that. Avoid unnecessary debt.
Which brings us nicely to his mindset, how he sharpens that strategic edge. He has that quote, "It's pretty stark."
And what about saying no?
Yeah. The difference between successful and very successful people is that very successful people say no to almost everything.
It's incredibly powerful, isn't it? It really speaks to ruthless focus,
Yeah.
prioritization.
You see it echoed, like in the stories about Steve Jobs, turning down tons of product ideas just to pour everything into perfecting the iPhone. Just like Buffett turns down countless investment deals because they don't fit his strict criteria, he knows that focus is where excellence comes from.
And another huge part of his strategic thinking is that circle of competence.
Ah, yes, stick to what you know.
Precisely. Only invest in businesses you genuinely understand. How they make money, what their competitive edge is, the whole picture. If you don't get it, stay away, no matter how tempting it looks.
So what's the takeaway for us then? It's really about knowing your own limits, right? Even if everyone else seems to be making a killing on something and you get that FOMO feel.
That fear of missing out.
Right, like that cautionary tale you sometimes hear, the neighbor who got rich quick on crypto during the big run-up, then FOMO'd back in near the top without really understanding it and lost like 80% when it crashed. Buffett avoided that kind of thing for decades with tech stocks, even when people mocked him for it. Because it wasn't inside his circle. He knew what he didn't know.
And that ties into his famous contrarian streak. Be greedy when others are fearful, and fearful when others are greedy. It's all about independent thinking. Don't just follow the herd. He recognized early on that consensus thinking, it rarely leads to exceptional returns. When everyone's excited and piling in, prices are usually too high. The real opportunities, they often pop up when fear takes over the market for those who have the courage and the analysis to act.
The story that always jumps out for me there is Michael Burry from The Big Short. Betting against the housing market in 2008, shorting it, making money when it collapsed. Everyone thought he was crazy.
Utterly insane, yeah.
But he was proven right. It just highlights how those really big, profitable insights often go completely against the grain. Buffett himself has famously bought heavily during market crashes when everyone else was panicking.
And one last piece of this mindset puzzle is warning about reputation. It's chilling, really.
It takes 20 years to build a reputation and 5 minutes to ruin it.
Exactly. And this isn't just, personal advice. It's a core business principle for him.
We saw that play out so publicly with Uber back in 2017, didn't we? The whole toxic workplace culture thing.
Mm-hmm. Billions lost in valuation.
Yeah.
Huge loss of trust.
And if a company like that, run by smart people, backed by top investors, can mess it up so badly, it really shows that integrity isn't just a nice to have, it's not a tactic.
No, it's a fundamental investment.
Yeah.
An asset. And once it's damaged, it can take, forever to rebuild if you even can.
So if you connect all these dots saying no, staying in your circle, thinking independently, guarding your reputation,
it all comes back to relentlessly repeating those small, smart actions. That's the snowball right there. And it's a principle that really anyone can apply, no matter where they're starting from.
And just to make that compounding idea really concrete, let's go back to that coffee example. It's powerful. Imagine you're, say, 23. And instead of spending, let's call it $5 a day on coffee, could be pounds, euros, whatever. You take that $5 and consistently invest it, maybe in a simple index fund, one of those funds that just tracks the broad market like the S&P 500. You do that for 40 years. Assume a maybe 10% average annual return, which is historically reasonable over long periods for stocks, though not guaranteed, of course.
Right, over the long haul.
That small daily habit, it turns into a truly staggering amount. Potentially millions, depending on the currency and exact numbers. It just makes the power of compounding real. Shows how tiny inputs, given enough time, explode upwards.
And That's precisely why patience isn't just, a nice quality for Buffett. It's his superpower. It underpins his whole systematic, consistent approach to investing. And a huge part of that consistency is his unbelievable dedication to learning continuously.
You're reading, right?
Yeah. 5-6 hours a day, devouring articles, financial reports, books. He credits so much of his success to just constantly feeding his brain, constantly learning, and also learning from mistakes, adapting his approach over time. He's not rigid.
It really sounds like his best investment tool isn't the stock ticker on his screen.
No.
It's his own brain. And that relentless curiosity. He's always adding more wet snow to his knowledge snowball, you could say.
That's a great way to put it. And it connects directly to his broader view on legacy. What's really striking is how people like him redefine what legacy means. It's not just about what you accumulate and leave behind.
Right.
It's about what you give forward, the impact you have. Buffett pledging 99% of his wealth, mostly via the Gates Foundation. That's immense. And then you have someone like Chuck Feeney, the duty-free founder. An incredible story.
The guy who gave it all away secretly.
Exactly. Quietly gave away $8 billion, died, essentially broke by choice. His famous quote was something like, "It's a lot more fun to give while you're alive than when you're dead." These are such powerful examples of using wealth not as an end goal, but as a tool to create massive positive change.
So wrapping this all up, what does it mean for you listening right now on your own journey to being well-informed, maybe financially savvier? Buffett's wisdom, it's clearly not just for billionaires. It's more like a roadmap, really, for anyone who's looking for lasting success, however they define it.
Definitely.
His life shouts that real wealth is built through, diligence. Saving diligently, investing smartly, and having the discipline, and this is the hard part sometimes, to live below your means.
Mm-hmm.
The power of patience, of compounding. It can turn small, consistent actions into huge results over time.
And cultivating those internal assets. Financial discipline, thinking for yourself, protecting your reputation, always learning. Those are invaluable.
And maybe most crucially, that ability to say no. To know your limits, stick to your circle of competence, that seems paramount.
So maybe the final thought for you to consider is this. Think about the small choices you make every single day, with your time, with your energy, and yes, with your money. How might adopting that snowball approach that focus on consistent, small, smart actions in those often overlooked areas, how might that transform your future?